Hi, good afternoon, friends. Today I have one update with regards to Yes Bank. There is another bank which is called SMBC Bank, which plans to take up a 50%, 51% stake of Yes Bank. They are currently in talks with the State Bank of India, which is the Reserve Bank of India, to finalize this process and get a clearance and go ahead for them to be able to do so. So some write-up that I've prepared for a briefing to you all. A prominent Indian private bank recognized for being India's largest six private bank lender is at the center of transformative deal. Japan's leading financial powerhouse is nearing an agreement to acquire a substantial stake in the institution, potentially triggering a mandatory open offer for an additional 26% ownership, signaling a strategic shift in its growth trajectory. Yes Bank's stock, with a market capitalization of 58,000 crores, rose to 1944 during the intraday trading. This is the share price as of Monday, up almost 10% from the previous closing of 1773. The stock has been underperforming over the last year. The stock price trading currently down by 22%. Key details of the takeover: SMBC is in advanced talk to acquire stake in Yes Bank, an additional open offer of 26%. State Bank SBI, Yes Bank's largest shareholder, 24%, seeks a buyer post the bank's post 2020 recovery. Other stakeholders include domestic banks, HSBC, HDFC, ICICI, Kotak, Axis, LIC own 11.3%, and PE firms Advent 9.2% and Claril 6.84%. A finalized deal involving SMBC's recent Mumbai meetings with SBI and key stakeholders could grant SMBC over 51% ownership, making India's largest banking merger and acquisition, surpassing its 2021 $2 billion Fultron India acquisition. The move positions SMBC as a Yes Bank largest shareholder. The role of the Reserve Bank: SMBC reportedly secured a verbal assurance from RBI to retain majority ownership in its Yes Bank despite FDI norms capping aggregate foreign holdings in private banks at 74%, individual limit at 15%. While RBI typically bars single foreign entities from controlling stake, exceptions like Fairfax 51% acquisition of Catholic Syrian Bank in 2018 and DBS's takeover of Lakshmi Vilas Bank 2020 were made when target equity neared zero. However, central bank clarified it won't ease the 26% voting rights cap. The central bank's flexibility shows its focus on stabilizing Yes Bank while maintaining regulatory guardrails. Sorry. Financial highlights. We'll go through some of the information here. Deposits surged 2.8 lakh crores in FY25, making a 2.7x increase over 5 years. Asset quality improved significantly, with gross NPAs falling to 1.6% and net NPAs to 0.3% from 18% and 5% in FY20 respectively. The bank posted a robust net profit of rupees 2,446 crores in FY25, up 93% year on year, and a sharp reversal from 18,560 crore loss in FY20. Meanwhile, the net interest margin remains stable at 2.5% compared to 1.4% in FY20. So, important disclaimer, friends: all investment opinions and recommendations mentioned are solely of those of the experts, broking houses, and rating agencies. These views do not reflect personal opinions or advice. Stock market investments carry inherent and risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The authors bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. So, friends, we'll continue with some other important information. There we go. Okay. Okay, so current price it's at 18.21. Thing is corrected after the Monday update that I've shared with you all. Currently, the last 5 days it has gained only 1.56%. Whatever gains that it had made, they've sort of corrected again in the last 2 3 days. Prior to that, you can see in the last 1 month the stock has gained about 8%. Last 6 months it is showing a negative return of 2.5%, and in the past 1 year it is showing a negative return of 20%. This is the logo of Yes Bank. Stock price may face volatility due to ownership structure. Stock is at a premium valuation at this point. Company is highly inefficient in the asset management. The company may not be able to sustain any adverse condition. Market cap 57,000 crores. Price to book value of 1.19, face value 2 rupees, book value 15.24. Then net interest income 8,000 crores, earnings per share 77 paise, CAR 15%, ROE 3.09%, ROC 6.18%, profit growth of 74%. These are the PA comparisons of the bank: Bandhan, Federal, IDBI, First Bank, AU Small Finance Bank, IndusInd Bank, IDBI, Axis Bank, ICICI, and Kotak Mahindra Bank. So you can see the market cap of the companies ranging from 25,000 crores to 10 lakh crores. And you can look at the price to book value of some of these. Price to earnings ratio is an important ratio. So Kotak Mahindra Bank, ICICI Bank are AU Small Finance Bank are on the expensive side. IDBI also is on the very high side, and you have comparatively better position. Federal Bank at 11.5, Bandhan Bank at 9.34, IndusInd Bank at 8.8, IDBI 11, Axis Bank at 13. Then return on equity mostly ranging between 14 to 15, which is the average. There are 2, 3 which are below the average, which is AU Small Finance Bank 13, IDBI First Bank 10, Bandhan Bank 10. Return on asset seems to be pretty low and poor. 2%, 1%, 1.5%. All these are pretty poorly phased. Then FIIs hold 26.87%, public 33% holding, DIIs 39%. So direct institutional investors is what is going to be the chunk where SMBC is going to acquire stakes from. Uh, Still, because of the public holding of 33%, the stock is going to be highly volatile in price and in volume, so something that you should keep track of. Capital goods adequacy ratio of 15. Company has delivered good profit growth of 33% in the last 3 years. Bank has a very low return on asset track record 0.3%. CASA growth of 0.14% year on year, which is low. Low return on equity of 2.7 for in the last 3 years. High cost to income ratio of 74%. Then engaged in providing wide range of banking and financial services. Uh, these ratios are slightly different from the other website. Return on equity 5.44, book value 15, stock price to earnings ratio of 23, high of 27, low of 16, current price of 18, market cap of 57,000 crores. The company is reporting profits, not paying any dividend, low income coverage ratio, low return on equity 3.61% in the last 3 years, contingent liabilities of 8 lakh 11,000 crores, which is humongous, huge. You can see these are peer comparisons. You have HDFC Bank here, Axis Bank as well, in addition to the other private banks that you can see. Stock stock price to earnings ratio range from about 10 to 21. This is revenue. You can see consistent revenue, not much of growth. However, the net profit has grown in the last quarter for Q4 FY25. You can see sales growth of 12% in the last 1 year, profit growth of 90% in the last 1 year, stock price minus 26% in the last 1 year, return on equity of 5% in the last 1 year. Reserves have grown by 5,000 crores in the last 1 year, which is a good sign. Borrowings have reduced, which is good. Overall liabilities have increased. Deposits have increased as well. So overall, a good update for the company from a good perspective, market perspective, driving good sentiment in the market. If you wish to stay input in the stock of this company or this bank, please consult a financial stock advisor or broker, as it can be highly volatile in price and value as well. So please make investment decision based on expert advice only. Please consult investment stock broker. Thank you. This is the current standing: 40% DIIs, 26% FIs, 33% public. That is it for friends today. This is all what we have for Yes Bank today. We'll come up with another update sometime later today or tomorrow. Thanks for watching. Please share this with your friends, family, and associates, those who would benefit from this information. Possibility of an update in response to a part of your stock holding. So if you have Yes Bank in your stock holding, SMBC Bank acquiring additional stake in this company would mean more stability and a direct link to the Japanese bank here. So that will drive some stability, but that again depends on what your financial stock broker would advise you. So thank you once again for watching. Have a great week ahead.